Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. Roll time. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you get it back. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and then don't think that anything is going on. Come back tomorrow and we'll do it all. Should be fun.
Good morning, everybody. It's Thursday. We've got unemployment numbers coming out in about 5 minutes, and the Treasury market is once again starting out with a very aggressive push into the upside. It really seems to me, I'm not sure what's going on, but I continue to get this signal screaming out at me that something is going on under the surface in the funding market. Banks like really want the treasuries for some reason. No real changes in fundamentals, but something's going on underneath of the surface. So come out over here to the charts, come and look at a volume profile here. So you can see S&P 500, after being down overnight yesterday, pulled out a pretty good win. It gave up a little bit of it at the close, but now here in the overnight session, we're rising back up again. So far, we're looking like a bullish week, and I'm actually suspect that this might continue all week, and then maybe next week the bears come in and try and take things down again. Here we got the Treasury yesterday, strong push up. Most of that was in the overnight, but now here, look, in the overnight again, they're pushing, and I think that their upside target is going to be somewhere, around 117.24. You want to look at the single prints usually is like the first place that you might see reactions or like pushback. Well, 118 maybe might be their eventual target. Oil's still kind of struggling a little bit, so I think that there's still a bit of this global growth concerns out there. Natural gas kind of similar. And we got gold and silvers. Gold and silver were doing well yesterday, but have very quickly gave their gains up. So you're still just not getting paid over in gold and silver, even though it seems like, you should be with inflation. Copper continues to be in doldrums. So are things just not going very well in China? Is that what is made? If it was all China, and I'm not really hearing much out of there, but that would be a place where I would be less likely to hear it, catch it. So it could be that. Here we got the dollar looking strong this morning, but still, 104. Nothing too crazy. And we got Bitcoin being pressured overnight, but once again recovering it. So they're just kind of flirting with this 20,000 over and over and over again. We've seen this before where they'll really get hyper focused on a certain level, and what I've seen happen in the past is they'll really, really strongly breach that level and then like bounce back really, really hard, and then eventually fall back down to the level and really go, and then you really get the real crash. I don't know if that's what's going to happen in this instance, though. I think that the market should still be stuck in this kind of like a concern about stagflation, concerns about growth versus concerns about high inflation, and that's probably going to continue to put pressure on Bitcoin. And so I'm more concerned that you just see slow, steady pressure and eventually they succumb. Good morning, Reggie. How's it going? That's a new name. Let's see here. Okay, so we got everything going good here. Okay, so we need to check up on what the numbers we're expecting here are going to be. And at the bottom of the hour, we're going to get U.S. initial jobless claims. We're looking for a 226. Looking for a reading of 226,000 versus a previous reading of 229. Also get the U.S. current account, which is usually not a market moving number, but is an interesting number. So I should also note that this move up in the treasuries that's more recent seems to be highly correlated with the Japanese yen. So maybe they are expecting there to be a reversal in the Japanese monetary policy, maybe? Is that maybe something I missed? Let's see here. Here comes the news. Okay, deficit wider than expected. Okay. 229 versus a 226, so a little higher than expected, but not really too much. S&P 500 selling a little bit off of that. You might see a continuation of this bull run that we've been seeing here in the treasuries. I don't know if I would like to hit into 311 with the spread as wide as it is, but this looks like you could get a rush here. Well, we could do it with the sim account here in the treasury. Why not? Take a tick there. Easy. Easy little one ticker. Probably could have done 2 and held that. Yeah, there you go. Sometimes Globex makes no sense. What's going on here with my chat? It's I thought usually you guys start at the top. Oh well, whatever. I forget what this other tab that I've got here is. Hmm. Sometimes Globex makes no sense. I think that usually Globex should make sense. It's just that the things it's really easy to move it in the Globex session, and we here in the U.S. Lowly retail traders in the U.S. just aren't aware of all the things that are going to be moving it during those times. But the thing that moves the markets is the orders. I know that seems like it's a no dust statement, but most of the contradictions in terms of trading can be explained once you understand that it's the orders that move it, right? So there are orders that go off in the Globex, and the problem is just that we don't understand them all very well because we don't live in those countries. So it's really hard for us to get the context behind who might be making moves and why based on things that are going on over there, right? So like if I come over here and look at the blog, JPY outperforms on risk is what they're saying. So I'm looking here, I'm just scrolling down. Did I miss something about the yen? Buck benefits directly alongside yen as risk aversion intensifies on heightened recession anxiety. Funds and oats front run last broad and big bounces. PMI missed consensus by some distance. Gilts and U.S. Treasuries tag along with a lag post solid UK services PMI and pre-U.S. jobless claims. I was going to sleep yesterday, clearly expecting a gap down, and woke up with the Globex up 0.7. Well, so here's another thing: is I think that a lot of people right now in the markets, again, a lot of it has to do with what we tend to focus on, right? So I'm sorry, my voice is a little. I'm still a little sick, I think. It'll take a little bit for me to clear things out. So what are we focused on as retail traders? We're focused on primarily sentiment. I mean, sentiment is the main thing that we come through. And a retail trader looking at the market right now, it has to be sitting here saying like, oh man, we're about to go into a recession. If that's true, then the downside that we've seen in the market is only the beginning. This is like we're like in October back in 2008, and we're not even close to the bottom, sort of a thing, right? But we're not thinking about how many stock buybacks have to be done right now, how many funds need to rebalance, that sort of a thing. And especially with all of the options expiration that we had last week and everything, I think that the market is just really well positioned right now to rise in general. And so I think that that's primarily what you're seeing, right? So the action that we're seeing this week is not, or I would be very cautious about reading that as a what do you say, as a signal that the economy is actually doing well, right? Okay, I did change the instrument list correctly. I just forgot to add the rest of my complex there. There we go. So something that's been happening to me, I'm hoping to record this weekend, but I've been testing a KVM switch, and I think that the product is really good for what they're getting. It doesn't perfectly match my use cases, and so I had to use like a little. It's like it's all HDMI outputs, and most of my outputs are DisplayPort. So I had to use a converter. And the converter screws up the EDID. It's like the EDID doesn't recognize the monitors when they're connected in through a converter like that. So when I switch to the other machine, it like rearranges all my windows. So I haven't been saving the workspace every time I close down. I'll like make a change, and then I don't save the workspace. I have to remember to like save it before I start working and stuff. And so I've done these things like I fixed the 6J and the dollar yesterday, right at the beginning of the stream, and then I forgot to save it, so I had to do it again today. Good morning, D. How's it going? It's kind of fun. I would go down the rabbit hole. It's this KVM switch thing is so interesting because making a DisplayPort KVM is kind of hard, actually. Because basically there's so much bandwidth going through those cables, and you have them so close to each other, and you have to shield it and everything. To keep the signals clean is quite expensive, actually. And then on top of all of that, so you have to get really good components, and then on top of all of that, we have like a pandemic. So there could probably be much better DisplayPort KVM switches out there, but they're not out there because of the supply chain problems. So these guys, they have a HDMI one, and it's really good. And I'm like, I wish that you would make a full DisplayPort one, because they have some features built into it that the other switches that I've been looking at online don't have, and that I would really like. Like, it has the ability for me to have one computer on this monitor and one computer on this monitor, and just the simple key press that switches between the two of them, just the mouse, and it's crazy fast, and it's so much more efficient for me. I really like that feature. Anyways, oh, okay. I know. I was sitting here. I was like, so do I got everything squared away here this morning, or is there more that I want to do? And then I'm just reminding myself, okay, yes, actually, we do need to do these things. We need to check Twitter. We need to see if there's anything interesting. Ponzi scammer bails out Ponzi scam. He's going to need to start a new Ponzi. Be careful about any sudden blockchain scams that pop out on FTX. Or maybe he can just pump and dump another token. Now's your chance to withdraw from BlockFi. Take it. Yeah, right. Seriously. I can't believe that people are really wanted to get involved in all that and put that much money into it. There it is, December 22, euro-dollar futures inversion. Only a matter of time, though it didn't take much time, which should scare the pants off of people. It's amazing just how many people are in denial about this. The euro futures nailed 2019, predicted 2008, and got .com recession before .coms. Okay. All right. So what is he? He is showing that the euro dollar. Okay. So, oh man, I don't know. I don't think we have Akshay here yet. We'll have to remind me when he comes. We ask him about that, because I don't think that we're seeing that in the SOFR futures. So I'm kind of wondering if the current financial conditions kind of change what euro dollars themselves might actually be telling us. A glowing review of Edge Pro X. There are some, it does kind of look like a slick platform. I don't know if it actually does things that the other platforms don't. I am kind of thinking, though, I don't know if I really want to do it right now. I'm kind of thinking of like just running down this account over the summer and switching to Edge Clear in the fall. I think it's a better time to switch, but yeah, but maybe not. Maybe we want to season the account a little bit. I don't know if that actually does anything, but what's this? Dr. Jordan B. Peterson, BlackRock. Remember that name? BlackRock is no friend to you, country. Okay, boy. Oh, boy. What if I told you there is a company largely responsible for the massive corporate push of left-wing propaganda in the past years, and they're doing it through an investment score? Yeah. You know what? I think that there's like, okay, maybe BlackRock should be doing things differently, but it seems like the average person does not understand very well what BlackRock is and what they do. And I question if Jordan Peterson does. I think when it comes to psychology, he's a genius, and he has so many absolutely amazing insights, but he doesn't know crap about finance. But, I'm running into this over and over. I think it's fine. Only bad thing, it's Java. Oh, right. Yeah, I don't. And Edge Pro X don't have full features like Motive Wave Ultimate would have. Elliott harmonics. Yeah. Well, but those are, I don't know about that. So here's the thing: is that the things that you're mentioning are all indicators. If you understand how the indicator works well enough, you could probably make the indicator yourself for Motive Wave, right? So the features that end up mattering in the end to a platform are often things kind of deep down that the user might not necessarily see or know. So, they only see the end product. They only see the end product, and they don't understand how the base is. So there's one of the reasons why I've seen a lot of platforms, and I've had a lot of people that really try and get me interested in platforms, and I'm always willing to talk about platforms, because the really what I've done is I've taken my expertise in technology, programming computers, and I really am I'm starting to. I used to always think, oh, but there's these guys they know so much more stuff about, right? Well, yes, on that particular thing, but in terms of just the computer science as a whole, I know a lot, and because I've been there, especially when it comes to some of these things like um, QA tools and site reliability tools, I'm actually quite the expert. It turns out, and I've converted that expertise and utilized it in my trading is really what I did, right? And then it's kind of funny because the end result that I came up with was once I understood all of the data and everything was that the platform that's really the best for you is the one that just gives you the best execution and clicking is that the primary killer feature of Jigsaw is that it really is just the best way to enter orders in my opinion, and that markets are more informationally inefficient than they are statistically inefficient, which really sucks for me as a programmer, but it is what it is. Right. So I always want to talk about platforms because the audience responds to that. The people trust my opinion on platforms because I know a lot about the technology and I can dig into the insights of it. Right. So I've had many instances where people will try and get me involved in the platform, but then as soon as I start to look at, like, for instance, recreating my indicators on their platform, then I kind of look at it and I'm like, oh, this is why the NinjaTrader platform is so good, because they know all of these common things that people are going to do and they've already built stuff into it. Now it's not perfect. There are some things I have to say, like, man. When you want to make a trading strategy that really utilizes, like, what's going on with your account and so forth to make its decisions, right? For instance, like, just a really simple example is um, you've had 4 losers in a row. It's taken 4 losers in a row. Don't trade anymore that day, right? So I've written stuff to do that. You can certainly do it in NinjaTrader, but I wouldn't call it intuitive at all. It's a little bit messy, and a beginner would never figure that out on their own. They would only find it from the code in the forums, right? So those are some places where like other platforms could maybe improve, right? But usually they don't even have, like, the basic things, right? So if you just want to get order flow stuff, I haven't found anything that's even remotely close to as good of an API for doing order flow stuff than NinjaTrader 8. NinjaTrader 7 programming, by the way, was like hell. It was very popular back then, but once you've gotten used to NinjaTrader 8, trying to go back and, like, convert NinjaTrader 7 indicators is like, why did they ever do any of these things? It's really dumb. The worst is anything that's like multi-series, multi-instrument. They introduced a lot of functionality in NinjaTrader 8 to deal with those issues that make it simple for you. You don't have to deal with that complexity at all. But in NinjaTrader 7, it's all, like, right in your face, and it's a pain. Yeah, being able to execute without lag. Yeah, I don't think So here's the thing. I've experienced lag when we get, like, into a really, really hot market, right? I don't think that the lag has anything to do with the software platforms. I think it has to do with the amount of data that is coming through and the amount of system resources that I have available. This is getting to be an old machine. I should probably upgrade it. I actually have a ton of money saved away that I could do that. Earlier, or like last year, I was much more. This is kind of weird, but, like, we knew that inflation was coming this whole time, right? So before the first quarter of this year, before that time period, when I was making money, I was very, very anxious to spend it, just because I knew that things would probably get more expensive, right? So wanted to put as much of it as I could into assets that would make us more productive, right? I think we've done a pretty good job. 3070 is now 680. Yeah. Well, so what I have is a 1060. I don't, yeah, you know what's going to happen is I'm going to say this, and then as soon as I get a card, I'm going to regret it, right? I don't think that I need a 3070. I think that a 3070 would be useful for doing TensorFlow kind of stuff. Machine learning models, rather. But I think I'm a little bit away from being able to really focus in on the machine learning stuff as much as I would like. And they, so I just don't know if the 3070 Ti is really a huge improvement for me over the 3060, right? Yeah, more CUDA cores. But I know that because the thing is I used to be a gamer. And I guess the games that are out right now, I mean, a large part of it is that I'm just way more interested in my babies. But the games that are out right now just don't really interest me that much. Apex Legends was great when it came out, and now I'm just kind of like, this Battle Royale thing is old and tired. I kind of miss the days where it was just, you just play Quake and Unreal. And, it was just, you could just zone out deathmatch or whatever. It didn't matter. Now everything has to be it's either like randomized, like that's how I feel Battle Royale is unless you're the very, very best, it's just really how the game goes ends up being kind of random. Or you really have to break into like having an organized team and everything. And I'm just, I don't have time for that. To be that engaged anymore. I loved it when it was back then, but I don't think that I'm in for like a real dedicated team right now, right? So I don't play enough games to make like a 3070 worth it. I would like to upgrade my card. The main thing, well, I was actually for a long time. Actually, let's go and look at what the prices are, because I was looking at a 1660. Just that would be equal to the card that I have, but it would give me 350. But that's like new. I could get it under 300 maybe. Depends on which one I would want. Would probably want to look at that. The form factor and stuff might matter. Yeah, GPU prices are falling. Do you know that like normally miners they only sell like 25% of the cryptocurrencies that they own, and right now they're pretty much selling 100% of what they mine, and that's one of the things that's kind of depressing price. And I guess that happens because otherwise they cannot fund their mining facilities. So there's still a scenario out there where cryptocurrency prices fall significantly below 20,000 and a bunch of mining facilities just go kaput. And then, yeah, you probably will see a lot of cards come out onto the market. I mean, you can remember that a large part of the prices is also that the supply constraints, right? Because they came out with new cards, right? And I think that most of the new cards were snatched up by real gamers. It was just that everybody needed a new card, so there wasn't enough of them. So when the next GeForce comes out, which is supposed to happen in September, I believe, you might get a good opportunity to get cards significantly cheaper, and hopefully crypto has fallen significantly since then, right? So yeah, but a 1660 would give me equal performance to what I have now, but it would give me like the dedicated video encoder and some things like that. I would like a slightly better. I don't know if the 3070 would make a difference on this, but slightly better video encoding, decoding stuff for like doing DaVinci Resolve and stuff, because right now I will use proxy media with a significantly lower resolution so that it's faster to edit. and it works really great. But I wish that I could just use the regular resolution. That would be nicer. So maybe if that made that big of a difference, then I would do that. Or in there, the other thing is that like Premiere has this really cool system for like creating effects and stuff. And every time that I try going into that, my system just like chugs to a halt. And I don't know. I think that it might also be that you get like rendering performance enhancements if you buy the full version. But for what it is right now, it's kind of tough for me to do those sorts of things and add that kind of extra jazz to the videos, right? But like I said, you know, the focus has been on what are things that will make me more efficient. So like I bought this much better stand for the camera and have the tripod. It sits there all the time. I have the teleprompter set up with it, and I also got a different boom pole, hopefully so that if I position it right, I can use my hands a little bit more. But the overall objective is to make us more efficient, and it has been, because I don't have as much time to make videos, and I've been able to do them because a lot more efficiently, right? We have gotten more efficient, because that's what brings productivity increases. That's what really brings in wealth, right? If you give everybody cash, this just transitions into what we've been talking about on TikTok, right? You can't just come in and give everybody money, guys. It doesn't work that way. I don't understand. When I was a kid, I remember there was this one episode where Scrooge McDuck like gave away all his money or something, started being generous, and it led to widespread inflation, and everybody was really unhappy with the inflation that it caused. I remember there was an episode of the Aladdin cartoon, I think it was, when Diago he became a genie, and he tried to be a much more generous genie, and so he gave everybody jewels, but then you had to have like a whole bag full of jewels in order to buy anything at the market. And he's like, well, I'll just give people more jewels. No, it doesn't work that way, right? If everybody has more money, that's just more money chasing after the same amount of goods. And by the way, there was another thing. I should go in and grab the math for this again, because I've looked at this in the past. But one of the things that I'm hearing the modern monetary theory people say is, well, yeah, we'll print more cash, but this time let's not give it to people. Let's give it to the supply side. Well, they're basically saying let's do supply side economics. That doesn't work either, because the I forget what they call it. There's like a factor. So basically, you can look at different things that we would do that would stimulate the economy, and there's a factor, which is basically like, how much do we get out of it, right? And when it comes to supply side things, the reason why they've always been like, oh, we don't do supply side things, is because the multiples on them aren't as good. Like extending unemployment insurance has like a 2.5 times multiple on it. So like that, you really get bang for your buck. But when you start doing some of these other things, like reducing taxes on the supply chain and things like that, you only get like 0.75. So what that means is, if you go and you put money into that, you are going to create more goods, but you're not going to generate as much as you put into the economy with money. So in effect, by doing that, you don't reduce inflation, right? But if you just put it into consumers, right? So that's the whole thing, is the supply side, you kind of don't want to put it into the supply side because it's not very effective. But if you only put it into demand, then you get problems. So you have to do demand and supply side, right? And you really only want to do it when you have to. Because if you just leave this as a constant state, like the modern monetary theory people say, then you create a lot of inefficiency in the economy. And that's what you see in our economy today, right? They kept things like that for like just 2 years, and it was crazy. Like, imagine if they were able to do that for 10 years, right? Be nuts. So, right? What is the thing that actually improves the standard of living? It's productivity. It's advances in productivity. And like the sad thing is that we're kind of becoming less productive. We're kind of like what has happened is we've squeezed all of the productivity that we could get out of just like the technology. Like, most of the jobs that were easy to automate with the technology are there. That's already happened. Now we're going to get into some jobs that maybe AI can do, but that's actually quite a bit more limited than people think. So, and then on top of all of that, you've found all of the inefficiencies from having to maintain the technology infrastructure and the code and stuff, right? So until we get better at maintaining the code, that's kind of a damper on productivity. And then on top of that, nobody's in the office anymore. So Microsoft did this study. This is not going to be a popular thing, but Microsoft did a study. Are they going to go push up a new high here? They kind of poised to do it, but I don't know if they're actually going to do it. Anyways, they did this outside company did an investigation of productivity at Microsoft, and they found that when the pandemic happened, that at first there was an increase in productivity, but then as time waned on, productivity decreased. And they hypothesized that, and what they kind of found from talking to people was that teams became more isolated. People weren't talking to each other. And so there wasn't the cross-pollination and so forth that leads to strong productivity, right? So we might have a little bit of a productivity problem right now, right? When that should really be the focus is, if you want to improve the standard of living, you got to become more productive. That means you want to be more informed, more efficient, more innovative, more dedicated, right? These things that make you, the output that you put out, greater for the same amount of money, right? That's what brings changes in standard of living into the economy, right? But everybody on TikTok seems to think that you just print money. It's so fun, or it's so funny. Like, here's the thing. When things are going well, right? When we're like close to a market top, you get all these grifters, right? We all saw them. They're all telling you what meme stocks you should buy today, what cryptocurrencies and DeFi you should invest your money in. And what happened, right? All those stocks are down. The people that were hawking those all ran off with the money, and you're left with nothing, right? Well, when things are going poorly, you get a different set of grifters. This is socialists and so forth, right? They say, okay, why don't we take all of the wealth from the wealthy and you give it to me, and then I'll distribute it to you equitably? Or how about we print a bunch of money, you give it to me, I'll distribute that wealth equitably, right? But don't you see? It's the same scam. What happens? That politician, influencer, whatever, takes all of the money and runs off, and you're left with nothing, right? What actually leads to improvements in your standard of living? Becoming more informed, becoming more innovative, more efficient, more dedicated. Those are the things that are going to bring all of these other things, these shortcuts, are all just schemes designed to siphon capital away from you. And it's just, because really these socialists, because I'm telling you what, the socialists, they always come out during the recession, man. It's already starting. I think it could get a lot worse, right? They're going after the same audience. They're going after all of the people that had just gotten screwed over by the stock mania or whatever that they had. The same people. They find the same people and they basically run the same scam on them. and like nobody sees it. It just drives me absolutely insane. Dr. Mumu, yeah, thank you for backing me up on this one. You know what? Something that really sucks on social media. I guess it doesn't really bother me too much, but I see it and it's like, well, the world would be better if it was like this, right? Is that the people that agree and care kind of say, well, he already said it, so I don't have any reason to leave a comment about it. You should leave a comment though, actually. Like when you really think about it, if you think that it's an important thing, you should leave a comment, even if you don't think that your comment is adding anything to the conversation, simply because that will boost the video, right? If you can say something that prompts other people to reply to you, then you're really helping the video out, right? But what tends to happen is the people that agree with you and understand what's going on don't have any reason to say anything, and all of the poopy heads that don't know what's going on and disagree with you and want to be toxic and mean are the ones that end up commenting. So if you try and post something with meaningful information about economics, right? It's like, here I am. Okay, so you think that it's bad that the Federal Reserve is trying to get wage increases under control, because shouldn't people be paid more? Well, yeah, but all you have to do is look at a chart, guys. Look at a chart of wage increases, right? It's way above its normal trajectory. This only happens when the punch is being spiked, right? And all you have to do is look at a chart. So here I am, I'm providing data. I show you the chart. I explain the economic concepts, right? And who are the people that get the attention? It's the people that don't say anything. They just get on and put on this show, histrionics, over how the Federal Reserve hates us and is trying to keep us all poor and yada, 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 right? This is like the popular thing on leftist social media right now, right? And if you address their misinformation, you get a bunch of hateful comments, and they're never like, okay, here's some actual economic data that would suggest something. No, it's never anything like that. It's like, well, you're bald. Well, who fucking cares, dude? It's not a bad thing to be bald. I like being bald, and it has absolutely nothing to do with the subject, right? It sucks. It sucks that it's that way. I mean, I'm not the kind of person that bothers me, because I'm very disagreeable and I'm going to say what I'm going to say. And the people coming in and being toxic to me is like, yay. I can continue arguing with people and that will bring engagement to my video. But I do have to admit, society would probably be better off if it wasn't that way, right? Anyways, so I only had that tab open with the graphics card that whole time. And did I miss anything here? Kaliningrad Row points to gradually growing Baltic war risk, says Reuters. Along with Poland, the former Soviet republics of Estonia, Latvia, Lithuania have been the strongest backers of Ukraine and pushed the toughest line against Moscow, right? And they're holding Kaliningrad to the sanctions and so forth, which is a big problem for that region. Oh, Biden is going to be talking again today. I don't know. And then you got to remember that Powell will be speaking again today at the same time, I believe, right? So you might get a similar market to what we had yesterday, which in the end was really quite volatile, right? Yeah. Man, did you see the thing? Well, I haven't seen too many highlights from that meeting. I was really busy yesterday at work, so I didn't have as much time to read the news. But man, Elizabeth Warren, I do not like that woman. She asked the chair the most dishonest question. And you could tell by the way that she framed it that she knew what she was doing. She's like, "Oh, everybody's um, food prices are going up. This is a big problem. Is you raising interest rates going to make the price of food go back down?" She said it that way, right? Well, why is that dirty? Well, because the Federal Reserve has a 2% year over year inflation target. So, by printing money, their long-term goal is to bring inflation back to its long run average, 2% per year. And so that does not mean that the price of food will go back down. It just means that the price of food will stop going up as fast, right? So for him to be accurate, for her to be accurate, or sorry, for him to be accurate, he has to say no. But then she doesn't give him a chance to explain the real economics behind it and show why that what she said is manipulative. You know, she hates of course, but she like here's the thing is that there are a number of politicians out there, Elizabeth Warren being one of them, that really kind of believe in the modern monetary theory kind of way of doing things. I don't know if Elizabeth Warren is like an outright supporter of modern monetary theory, but basically they do not support sound monetary theory. This whole thing about audit the Federal Reserve or abolish the Fed. So dangerous, guys. Because you know why the politicians want to abolish the Fed? Because they think that they should have that power. That's really what it comes down to. Elizabeth Warren would like to be the one that has control over when the Federal Reserve prints and when they don't print, and they wouldn't do what is the reasonable, smart thing to do based on our current knowledge of economics and our experience and expertise. She's going to do what is best for her as a politician, and that's something that in the long run is very, very bad for the country, right? And so you get all of these things like the testimony before Congress that they do, like what? It's twice a year. Total waste of time, right? Because there's all of these. There's some senators that, man, it seems like they just don't know what the hell they're talking. They don't know anything about economics. It's like, how do these people get elected to office being so clueless, right? But there's other ones that know exactly what they're doing. And right, it's all about trying to generate a soundbite for the news to show to their constituents, right? So it's just a total shit show. It's not a useful meeting. What are those blue and red with numbers? You just talking about the DOM? So it's called the depth of market. And it's primarily an execution tool. So if I want to, say I wanted to enter a limit order at 117.14, I know that the numbers that you see might seem kind of confusing because like, what the heck? How come it goes 11? Or how does it go 110, 115, 120? Well, it's actually the way that treasuries are priced is in 30 seconds. These are priced in 30 seconds, and these are priced in halves of a 30 second. So that's why it goes 31, 0. And you'd see the same over here. 31 half, 0, right? And same thing over here. This would be 31 half, 31 3/4, 0, right? Okay. So if I wanted to enter in an order at 117.12, this blue column is buy, and this orange red column is sell. It's orange red, okay? It's orange red. Like orange red is a cool color, okay? You got to know the color. Anyways, I just click on the blue or red columns, right, and it puts an order in there for me, right? That would be a limit order. And then if I were to click at right now, the best offer is 16 half. So if I were to click right here on the buy side at 16 half, it would enter in a market buy order at that price, right? And then the numbers that you see in those columns are the number of limit orders currently resting at that price. So you can kind of use that to you can try and game the queue essentially. So if I wanted to buy, there's only 143 there. So I might be able to buy that just as it ticks up and buy, and then hopefully a bid stacks at 15.5. Let's see if they'll do it. It doesn't look like at the moment that they're going to do it. It looks like there's a little bit of bearish pressure coming in. But if we were to buy it at 15.5, yeah, see, it's ticking down. So, but right now, probably not the best point for a buy, right? But hopefully you hit into it and then it ticks up, and then there will be some orders behind it, right? So now what's happened is you're long and you have the opportunity to exit your position at break even if you wanted to, right? Because otherwise, if I just bought at 15 right now, it doesn't move. In order for me to get out, I would have to sell at 14.5 and take a 1 tick loss, right? So if I can time it right, then I can basically eliminate that spread, which is an advantage, because otherwise you basically always start down, right? So the same case here in the micros is like, it's even worse over here in the micros, right? Because there's a little bit of a spread. Sometimes you're paying like a 5-10 tick spread. So if you hit into it, you're paying up a lot to be able to be in a position. So it better really be moving up a lot for you to make money from it, right? But if I can do it like maybe right now, if I were to hit it at 119, yeah, it's a little bit too fidgety there. I'm not too happy about this particular spot of the range, but there might be some support here at 14. There is a little bit of iceberging going on there. So these are all things that I talk about in my order flow video series, but do you see how took 2,000 to tick down? So there was a little bit of an iceberg there, and you should expect that because it is the bottom end of this range that we've had here, right? All of these other prices, it only took like 600, but that time it took 2,000, right? So that might provide some support, but I'm wary about that sort of thing. When I see a lot of volume at a price, that makes me wary, because the tendency of the market is actually going to be to rotate around that price unless we really have strong momentum. But they are buying it up here. Okay, so there would have been an instance right there, is if at 122 there was a one lot sitting there and somebody bought into it, right? So now they're immediately up 1 tick. Now it can move after that. Looks like they may actually be losing, but right. And maybe you could have a limit order out there at 3.126. You might have a good chance of getting filled, right? We could pick up this guy at 123. See, there's a couple of guys, but there's like nothing at 120, 3.124, right? So if I pick that off, next person that buys would have to buy even higher. So this is to my advantage. So that's kind of we use that kind of information to kind of try and optimize our entries per se, right? And there are some other empirical properties of the order book that you can judge from how this is moving. They tend to, when there's a lot of volume at a spot, it tends to create a liquidity hole, which will make us rotate around that price. So we can kind of use that to another thing is that a large order, the impact of it, there's kind of an upper limit on how much impact you can have. It follows the square root law. So that's why when you see a trend, it tends to go like, where's my highlighter? Trend tends to go like this, right? Trend tends to go like this. Right, there's a reason for that, and you can actually time it because you can calculate how long it takes for this to decay and stuff like that. So that's what we're doing, essentially. But the point that I was trying to make to you, well, one, just what it did, but the other thing is that like the primary advantage of it is being able to watch right here and see how many orders are in the queue and time my click. And it's everything that I need to know is literally right here where I can see. I can see all of the correlated instruments, in a row here. See how there's like these lines that line up and I can recenter them, right? So I don't have to move my eyes around very much to see what's going on in the market as a whole. And where I'm clicking is exactly where I'm looking. So that's kind of the advantage of it, is it's just a much more effective way of entering orders in, rather than opening something up and having to type the price into it and the number of orders you want and then clicking buy or sell, right? I just say, okay, I'm going to do a one lot, and then I just click. One click, then you're in, right? That's the advantage of it. That's the biggest advantage of it. Well, it's interesting to me that the ZB is almost to its lows here. So that means that we are getting some steepening today. As compared to the fairly aggressive, I would say, flattening that we had yesterday. Do you use any sweeping? What do you mean by a sweeping template to help you see big contracts? One click in what market order? Well, it's whether it will be a market order or a limit order depends on where you click. That's another thing that Jigsaw does. I don't think that any of the other platforms have, is that it will switch it between a market order and a limit order and a stop order based on where you click it. It basically, I find it really useful. I mean, there's some disadvantages to it, but for generally what you're doing with scalping, yep, if I want it to be a limit order, I click here. If I want it to be a market order, I click here. Right? That's lovely. Now, I want to know, what do you mean by sweeping templates to help you see big contracts? I'm not sure what you mean by that, but I do have a couple of things that help me see large contracts. So one thing is just that there is this profile. Okay, so to detect sweeps, yeah. Okay, so if you're talking more about large market orders, you can't see it. But if I change my screen to get rid of me, right, there is a little bit of stuff that I hide behind my picture. The little controls where I can select how many contracts I'm using and everything. But then I have these reconstructed tapes. So something that's really annoying is that when you get the feed, like in your regular software, and you're looking at a tape, right? Like if I opened up the Jigsaw or the NinjaTrader tape, when I see orders come through, what I'm seeing is the limit orders that got filled, not the market order that hit it. So if one market order hits 1,000 limit orders, I'll see on my tape 1,000 limit orders. And what these reconstructed tapes that Jigsaw has does is it reconstructs those. It says, okay, all of those orders went out and there was only one change in level 2. So that means that all of those orders were taken out by one order. So I can then come in and say, oh, okay, that order was actually 1,000 lot or whatever the deal was, right? And it will also color it differently. So see how some of these are colored like cyan? That means that cleared what was resting there, right? So 155 lot cleared it. Somebody came back and sold it. So it looks like somebody is pushing up quite aggressively, but there is some orders fighting it. That might be a good situation to try and pull out another tick. In this kind of a situation, something that whenever you're at a high, something that I'm always looking for is if there's absorption just below the low. So what you would typically tend to see here is an iceberg at 19, and it would maybe take about 3,000 contracts to try and sell it down at 19, and it holds. And then they hit up into 20, or maybe you see it at 19.5 too. But basically you'll see absorption here. This order will pull or get hit, and then they'll stop through it for 2 or 3 ticks, and then you take it off. This is a level break setup. So normally a level break setup is a 50-50 trade, but if it's a trend day, you win like 90% of the time. If you know it's a trend day, that's the hard part. But I digress. So yeah, I can see the big market orders. You can just see it happen when you're watching the DOM, but there are some other tools that kind of help you see that as well. I don't concern myself too much if there's like one big order. Okay, so it did it. Man. I looked away for a second and then I missed it. This is my favorite. That's my favorite thing, is to watch those level break trades, man. Does the YouTube stream lag? Oh, so the YouTube stream tends to be 3 to 5 seconds behind. So not by too much. Not by too much. Just enough that you're probably not going to do any high frequency trading from looking at my screen. Wow. I tell you what, it's kind of interesting how we identified down here, okay, there was an iceberg. This should be some support. It came back up so fast, and now they're getting gangbusters long again. I don't think that I really want to get involved in it now that it's gone. Like, the trade is kind of over. And I didn't necessarily have anything to tell me that it was going to do that explicitly. We could see from the structure of the market that that was possible. But the thing that I'm looking for is, what do I know that would give me a strong probability of predicting that the future orders would be mostly long? Something really happened there in the Treasury. They bought up 20,000 contracts there for no apparent reason. Really is a little bizarre. Chair Powell's prepared testimony to the House at 10 a.m. is the same as in the Senate yesterday. Oh, is it? Okay. I don't know. I'm not sure I can explain what would have caused that spike. I don't see a news or something to do it, right? That's why I haven't taken a trade. I'm also a little bit more weary about taking trades because it's the summer. But that's one of the things that's frustrating about the summer, is that you'll see these moves that are like, oh, that I should have taken that. I would have made a ton of money, right? Would have made, well, at one point we were at 3.11 last time I remember looking in the micros, so we could have made 20 bucks there, right? But you got to be able to predict the orders. What did I know that would have predicted the orders? It seems like that there could be something to know that could have predicted the orders, but today I was not the person that knew it. Right? I think something is going on in the Treasury market. Do you guys feel it? It's like all of the sudden the banking system seems to be strained. Credit spreads are like just going nuts. And we're seeing this really strong rush for treasuries, which doesn't really make sense given the context, right? Maybe it's just that they really do think that we're going right into a recession and that the Federal Reserve isn't going to come anywhere close to being able to reach their target interest rate. Like, they're not going to get to 3%, or I don't know. Because they're just buying the treasuries up like mad. And right now there doesn't seem to be a reason for it, which means that, like, it's a strong enough reason that they don't want anybody else to know yet, right? They do the thing and then they go and they tip off the news and we find out what happened, right? Magic. Oh my gosh, that's a funny name. Welcome to the stream. German 10-year yields with the stairs up, elevator down vibes. It could be driven by European. Could also be like Japan is buying more bonds or something like that. I don't know. So the Japanese yen has seen pretty strong. Yeah, it's up. It's up. It was not as correlated that last move up. We are seeing a pretty strong bid come into gold from that. So there's that. And we are seeing the dollar move, right? But I'm not 100% sure what's going on. I feel out of the loop. It's frustrating, but that's okay because I don't have to trade, right? Don't have to trade. Can wait until we feel like we know something that the market doesn't, right? Okay, so here's the S&P 500 starting out. What they're going to do, it looks like that. Okay, a little pushback, but there was a little, mostly the buyers, and then a seller came in and swept it. Yeah, that actually you can see here change in cumulative delta right there. So it took them a few seconds to sort it out, but it looks like the initial move in the S&P 500 was a sell. Looks like now the buyers are going to try and take it their way. Treasury is still moving quite a bit here. Reports suggest troubled crypto brokerage Voyager has reduced daily withdrawal limits from 10K from $25 on reports of loan exposure to Three Arrows Capital. It doesn't sound like a good headline for cryptocurrencies in general, but I'm a little. The trading floor audio seems to be highlighting that, which is a little odd because I wouldn't normally expect them to be that interested in a cryptocurrency headline. How low is our treasuries? How low is our interest rate going to get? Well, now we're only 9 basis points or so away from 3. You remember earlier, before that headline CPI inflation, that like any time that we got above 3%, it was like buyers would come into the treasuries. But I still kind of suspect that barring a crisis, I mean, if we have an economic crisis here, if something breaks, then all bets are off, right? But otherwise, I'm going to bet that the Federal Reserve is going to keep pushing interest rates until they get to at least 3.5. So that's why this is all really interesting to me, why they're pushing here the way that they are. But it's a pretty strong bid today. It looks like I don't know. They're probably coming close to their impact, so a buy right now is probably not very well positioned, but it does look like a move that could just continue going all day, right? So I'm wondering if we wait for it to come back a little bit, maybe 117.20. Hmm. So the 5-year is lining up to another large order, even though we're kind of in a spot that it would be difficult to move them up. So that's curious that they're not backing off at all. That suggests that the buy here really is truly strong, if not outright like it's like outright panic mode. So again, it's really bizarre to see them pushing this aggressively without a fundamental driver. Hmm. Oh, there's maybe a little bit of a level break setup right there. I'm not sure that I can call today for sure trend day, but that one's probably worth playing. So this is where I would maybe put it right. Well, actually, I'll try doing it both ways so that you can see if we get it. I feel a little bit worried about this one, but so yeah, that what just how I got filled there is kind of a little bit of what I was worried about. So I could just dump it. Looks like they're giving me an opportunity to bail right there. I think you guys would rather see how it plays out though, yeah. So let's do that, and I'll dump it if it goes a little bit further down. It's just a sim trade. Oh, come on, come on. Good. Oh, we do get more numbers today, don't we? We got PMIs here in about 5 minutes. Maybe they expect those numbers to be really bad. I don't know. Hmm. So the news squawk is pointing out to me that the PMIs in Europe were not very good today. So that might be a reason for why they might be bidding really strong, is maybe it is front running the PMI release that we're about to get. Is Powell's testimony going to be more significant? Probably not. I mean, it's going to be like yesterday, right? Nasdaq killer. Did he say anything or truly market moving? No, but there sure was a lot of volatility while he was talking, wasn't there? Hmm. Gonna take on a lot of risk here, I think. They didn't quite do the level break setup that I was looking for there, but there is a distribution going on up here near the top. So that's why I think it might be fun to do all sorts of irresponsible things with my sim account here. If it was doing this and we didn't have PMIs coming up, I would maybe even be thinking about putting risk on in my live account. But Bitcoin is starting to turn down a little bit more. Yeah, that last candle in Bitcoin is starting to look a little ugly. So the initial move on the S&P 500 was a sell, right? Buyers are pushing back very aggressively now all of a sudden. Okay. So something right there. Okay. So 20 was kind of where I was watching before, where I was like, well, maybe they'll come back to there, right? It's too close to the PMI, so I don't think I want to take a position, but maybe I could sell 3.100. I don't know if that would have filled per se if I had put the order out there, but just kind of keep that spot in mind as a reference point. Can we have some green? I don't know, man. I don't know, man. Green for me or green for the S&P 500? Green for me at the moment, it's not looking so hot, is it? Looks to me like the party might be over and I tried doubling down on a bad one, but this is why you remember though, like I need to see something that allows me to predict the future orders really well, right? Well, the PMIs could be something that could help me do that, right? I don't know what the PMI is going to be, so it doesn't make sense for me to take a trade ahead of that. But after it happens, maybe. That's why I did this over in a sim account, because I kind of saw a structure that I could maybe take advantage of, but I didn't have really good predictors. So you can see the way that this played out is exactly why you got to be careful about that sort of thing. Good example of why what I'm doing here in my sim account is irresponsible if you're doing it live, right? Well, they are showing a little bit of support at the VWAP. Also seeing the 30-year come down pretty hard. So I'm still getting a pretty strong steepener in the treasuries, basically. So I think that the buyers may have breached a little bit there at 19, but you can see the liquidity pulling for the news. So oh, that is bad. Shoot. Oh my gosh. Jeez. So I was sitting there thinking, well, maybe when it happens, I can put a market order in, and I got myself all prepared, and look, it dropped 2 basis points instantly right there. Good grief. I tell you what, though, I sure look like a genius for doubling down on that one, don't I? Somebody knew. Somebody knew that was yeah. What happened in ZN is cuckoo. Yeah, that was wild, dude. The like the pullback before the news was like what? Basically, anybody that was trying to ride that momentum probably got screwed. If I was like trading like my close risk that I like to do in ZN with a live account, probably would have gotten out. And then sure enough, the number, okay, services PMI 51.6 versus an expected 53, manufacturing 52.4 versus an expected 56. Let's just remember that a PMI is like 50% is like the even level. So it's not like it was like below 50. That would be bad, but it was much lower than expected. I'm so lost. I thought Powell would say some things and done. No. Okay, so what we just had was the PMI numbers. Powell speaks at the top of the hour to the House of Representatives. Yesterday he talked to the Senate. Today he talks to the House of Representatives. That will be another one of those, I don't know if you really want to trade during that time sort of things. I think Mr. Bond is right. It's better to be lucky than to be smart. Yeah. I just front run the news. I did. Well, there's very clearly a situation where the order flow was probably front running the news. Like I think that the best theory we have now to explain the order flow that we've seen this morning, especially the order flow that we started to see around 9:15 Eastern time, is that some large players were snatching up some treasuries in expectation of those PMI numbers being bad. And so in this instance, we read that order flow alone, kind of knew something was happening, even though we didn't know exactly what the thing was. So even though I wasn't confident enough in taking it with my live account, you can see how managing it with the DOM and everything would have been effective, right? You think that ZN was going to break higher? Give him a little bit. So I'm notice we might be seeing a change in the spread here, right? So that might screw a few things up. Right? I'm concerned that what you might start to see here is the 5-year lag and the 30-year lead. If we were going to break, you'd have to sell 3.8, right? Oh man. Well, did you see how aggressive some of those orders were? There is some pushback there, though. I don't know if I really want to take a live trade, though, because it is. Powell is going to speak at the top of the hour. So like, and here's the thing. Powell is likely to be hawkish. Just, I mean, yesterday he was hawkish. I would expect that he would still be hawkish. So what is that going to do? That's going to make the Treasuries sell. That's not going to work in your favor. 3.8 looked like a good spot to have gotten in though. For sure. You could see somebody was sitting there. I hope it was one of you. I hope it was one of our students saw that at 3.08 and was like, yep, I want to take that one. Hey, maybe it doesn't work out for them, but I still think that was a good entry if you took it. You know, like there's the entry and then there's like the larger trade, right? And sometimes you can get a good entry, but you're wrong on the larger trade. That's okay, right? But I guess I'd rather have a bad entry and be right on the larger trade, but if we can get both, we would like to get both, right? Wow, this has been something else. Okay, so I took off most of my contracts. I'll leave one on. I probably took some of them off too early. I don't recall how much was I down. I think I was down like 500, right? Can you explain by chance what is the iceberg order, please? Thank you. Okay, so an iceberg order is a limit order that is not all resting on the bid. So something that you might see is there's only 200 resting at 26, right? 500 resting at 26. But we might see some sell. Okay, not that time. Holy shit. Oh, what the fuck was that? Oh my God. Holy fuck. Whoa. What was that? Oh man. Okay, I'm out. I am not going to be placing a live trade after something like that. Holy. Yeah, what the... Did somebody just puke there, or is there something else going on? That was nuts. I have not seen something like that. Oh man. Well, there's no headline coming out. I don't think I've seen something quite like that ever. Like, news comes out, we're on like a really strong trend. News comes out, huge spike up, everything seems like it's calmed down, and then it just totally pops off for no reason at all. I've never seen anything like that. That was effing amazing. That was nuts. And there is that 118. Remember earlier when we started the thing, most of you were not here, but you remember when I was looking at the volume profile, I was like, well, if they're going to push through and say that CPI last week doesn't matter anymore, then that 118 is where they're going to want to be headed, right? You're making me envy ZN volatility. Well, that something like that is like a once in a lifetime kind of thing, dude. I don't think I've ever seen something like that. I think I've seen moves that were bigger. I think I've seen moves out of nowhere that were bigger. You know, but like not attended by breaking news. No way. That was nuts. Gold took a pretty good jump there too. And the Japanese yen took a really big hit there too. This could be driven by the Japanese yen. Like, I really think that somebody puked there. Hero trade. What you want to fade it? No. look that right there at 20. You see it reloading? That is the level break trade. You take that. That's either another great leg higher or a reversal. When you see something like that. Actually, that's too much now. put the order there. I'll just try and grab one. Yeah, 10,000 is too much. Yeah, well, okay, but so the PMI was lower than forecast. Jeez. Okay, like so I just want to point out, okay? We just had an insane move higher. And somebody has an iceberg at 02. So there's your example of an iceberg, right? It was 800 there the whole time. They traded 13,000 into it and it never was able to tick down through it. That is an iceberg. The latency on YouTube tends to be around 3 to 5 seconds. Did you see how when that move happened, how my DOM lagged a little bit? So this is what I'm talking about, where I was saying, like, I will experience lag, but I don't think that it has anything to do with my platform. Like right now, even though I have 32 gigabytes of RAM, I'm using 74% of my memory and 45% of my CPU. So, when that big spike hit, I probably maxed out my CPU. Maybe I should reduce the update interval on some of my DOMs. So I guess it must just be a little bit too much. I have a Ryzen 1700X. So it's a little bit older CPU. Those are like dirt cheap now, right? How can you share an image? So you can't share images on YouTube, unfortunately. If you want to share an image, probably the best thing to do is to go into the, start talking in main chat. Start talking in main chat in the Discord, and then we give you permissions, and then you can post pictures in Discord. Jeez. So if you had taken the level break trade at 02, it looks like it would be working out for you in the long run, but you took a lot of adverse excursion first. So that kind of makes me weary about taking that trade. Because I've been sitting there watching 3.05 and I've been like, well, there might be another five basis points in this. Who knows? Like, the thing is, it's always something that I've seen in the research over and over again is that good winning trades tend to go further than the funds hold them. Like the fund will get out. And then it will go up like 2-3 times that. Right? Okay, so let's see what's going on here, man. Oh, jeez. Okay, so here's our volume profile. And we were saying 118 maybe is kind of, I was only identifying 118 because it was like the most even number in that area. The single prints were right here at 27, right? The peak from the PMI is 118.06. Okay, there are some, oh, this is interesting, man. 118.05, 118.08. Is there any other media with lower latency? Yesterday, the Senate had a hearing with the Fed guy. So if you wanted to watch the hearings and trade it, for instance, then probably you would want to be like watching CNBC. Like you'd want to have a cable subscription and watch CNBC. or have the pro subscription online. And I think that's like almost practically live. But jeez. Okay, there's 06. Absolutely bonkers. I was thinking 05. I should have done it, man. Fuck. I'm just sitting here like a chump now. What's going on? This is nuts. I don't know. This thing scares me a little bit. I think that I need to just sit on my hands. The chances of this retracing back hard are really high now. I have absolutely no way to predict where the top is going to be. At some point, somebody's going to make a ton of money on a pullback, but when it is, I have no clue. But they are so well positioned to see a massive pushback. But it could keep going. I don't know. So what I'm trying to say, the liquidity is so strained up at this point. Like the lot of liquidity went off at 02. They have now pushed beyond that. It's really common if I'm I played it safe a little bit because I had already taken multiple contracts and stuff, but probably what I should have done and what you'll typically tend to see happen is you'll see a whole form right here. You'll see a whole form right here. You can see where it's sticking out in the volume profile, right? There will be a push further, and then they get sucked back into it. So right now it looks like they're getting sucked back into it, right? Now, that can provide a advantageous position to force a reversal, right? Remember our stylized behavior for markets. We just saw this. Right? Okay. That means that there's a hole right here that if somebody decides to come in and sell, it will have a stronger impact than that buy, right? So that's why with the hole there, I'm a little bit weary about buying it above that. I would think that it's much more likely that we get another leg higher, but volatility, yeah. Well, it was call it. I think that the term that people call it retail traders, like what retail order flow traders tend to call it is a liquidity vacuum. You know, like when you have news and there's a strong move up and then it gets sucked back into the vacuum. But what I call it is a liquidity hole, because it's not really like that there's some force that pulls them into that per se. It's that there's just nothing there. So it's really just gravity that pulls them back, right? They get basically, or here's another way of thinking about it, right? You have supply. Sorry, let me redo that. You have supply and you have demand. Okay. Now, a lot of people think that price will converge where supply and demand are at their maximum. So they'll say, there's these guys, they want to buy it, and there's these guys and they want to sell it, and they'll meet, and that's where the most people are trading, and it will just stay there, right? But that's not what actually happens. What actually happens is they trade there, and then you get left with this, where supply is like this, and demand is like this, and it looks like a butthole or something like that, right? Price will tend to equalize where supply and demand are at their minimum, right? Where supply and demand are at their minimum. So where are supply and demand likely to be at their minimum at this current time? Where all of the volume traded earlier. Because anybody that wanted to trade at 02 already did it. So who's going to be there to put a limit order at 118.020 now? Right? That's why gravity pulls them back into it. What's an iceberg? Didn't we just... Weren't you the one that asked me that? Oh, no, Magic One asked me that. WineTube is a different person. I'm sorry, WineTube. I got mad at you and your... An iceberg is a hidden limit order. It's a limit order where they're only showing 200 on the DOM, and then when that 200 executes, They'll add 200 more. What the fuck is going on? That was just another 6K go off there. What the hell? Is somebody just puking really hard, or is there something going on in the Japanese yen causing this to happen? That is just absolute bonkers. I know that those PMIs were bad, but the reaction that we're seeing is really crazy. I don't know if this is just, man, this is going to be a day. Like, we got to remember this stream, dude. What can we put in the title for today that will cause us to remember it? Because just saying treasuries rise on poor PMIs isn't good enough. Like, it has to be like because man, so like the last time I can remember seeing order flow like this was back when markets were seeing volatility because of like Trump trade war headlines, right? When the trade war was going on, you would see situations where the huge move would pop out of nowhere because of some headline hitting, and it goes up super strong, and there's so much going on. Liquidity gets light, and these big orders will just come through, and it moves all over the place, and it's crazy. But that was a situation when, like, the president of the United States was involved in a Twitter war with China, right? Okay, so you would expect the markets to be going nuts off of that. This PMI, okay, like the PMI was bad. I've never seen the markets react to a PMI this strongly. Okay, PMI is like a second level, a second tier data release, generally speaking. So, oh my gosh, Binance signs Cristiano Ronaldo for an exclusive partnership. These people. News Squawk says someone is going to get sued. Why did only ZN react? I don't know. That's actually a really good question. I mean, the S&P 500 and so forth did react to it, but it was much less volatility than that, and they moved down and now they're up. So, you know, I don't know if we can really call it in the ES what they're going to do overall. Right? Well, something else is happening, not because of PMI. Well, it could be, it's probably more likely something like somebody has a huge short position on in the treasuries because they expect interest rates to move higher. You know, like that would be like me. I expect interest rates to move higher eventually, right? And this move causes some speculators to come in and push up, and then they have to liquidate their position, you know. So you know, it could be something like that. It could be a combination of factors. It could be that a large player, maybe a foreign fund, for instance, a sovereign wealth fund, for instance, maybe they're coming in and we're deciding to buy today anyways. That kind of added to it. I don't know. But the kind of aggressiveness that we saw is something that I think that you would only see from a news release or a margin call. Maybe somebody got margin calls. Something's going on though, man. That was nuts. Well, shall we try? I'm not gonna trade that, man. It sucks to have missed that move because I was the right way with my sim trade, right? I just didn't have the guts to do it on my live account. I guess I'm just a pussy, man. I've missed a lot of opportunities lately, haven't I? Of course, I've had a couple of good opportunities too. So part of it was like, oh, I did really good. I want to kind of, I don't want to risk as much now. Pentagon wants Elon Musk to drop soldiers into conflict from space. That's the top story up there. No. The top story is Biden economic advisor asserts that more government spending will solve inflation crisis. That was right. Yeah. Okay. U.S. PMIs plunged to 2-year lows amid remarkable drop in demand. So maybe there could be some stuff in there. Okay. Horror show PMIs send Euro tumbling and Europe to edge of recession. See, I wish when we started here, I probably should have been paying more attention to that, right? I knew that the PMIs were bad, but that just didn't trigger in my mind as, oh, we got to pay attention to that one. So that was my bad. Okay, well, let's read what we might glean from the European PMIs, or sorry, from the PMIs release overall that we don't get from just the headline number, right? With European PMIs plunging in June and U.S. macro surprise data collapsing, it was perhaps somewhat surprising that analysts only expected a marginal drop in preliminary June U.S. PMIs. And we were right to be surprised as the data printed dramatically below expectations. U.S. manufacturing dropped from 57 to 52.4. below the 56.0 expectation, and U.S. services dropped from 53.4 to 51.6 below the 53.3 expectation. The manufacturing print is the weakest since June of 2020, and services at 5-month lows, but very close to 2-year lows as well. This dragged the U.S. composite PMI, which tumbled 51.2 to a 5-month low. 51.2, a 5-month low, signaling notable weakness in Q2 GDP. Commenting on the flash PMI data, Chris Williamson, chief business economist at S&P 500 Global Market Intelligence, said, "The pace of economic growth has slowed sharply in June, with deteriorating forward-looking indicators setting the scene for an economic contraction in the third quarter. The survey data is consistent with the economy expanding at an annualized rate of less than 1% in June, with the goods-producing sector already in decline and a vast service sector slowing sharply. Having enjoyed a mini boom from consumers returning after the relaxation of the pandemic restrictions, many service firms are now seeing households increasingly struggle with the rising cost of living, with producers of non-essential goods seeing a similar drop in orders. There has consequently been a remarkable drop in demand for goods and services during June compared to prior months. Businesses have become much more concerned about the outlook as a result of the rising cost of living and drop in demand, as well as the increasingly aggressive interest rate path outlined by the Federal Reserve and the concomitant deterioration in broader financial conditions." I have never seen that word before. Concomitant? Concomitant? What does that mean? What does that mean? You send it to me. Okay, I'll go look. Naturally accompanying or associated with. Okay. Fancy word. Business confidence is now at a level which would typically herald an economic downturn, adding to the risk of recession. A corollary to the drop in demand was less pressure on prices, with the survey's inflation gauges for firms' costs and their selling prices falling sharply in June to suggest that, although still elevated, price pressures have peaked. So it seems Al is getting his wish as the U.S. plunges into recession, and that tanks inflation. Meanwhile, Joe Biden, yes, a recession looks inevitable, but it may not be that bad. Here's why. Okay. Oh, that was not Joe Biden. That was the Los Angeles Times. The Los Angeles Times saying, yes, a recession looks inevitable, but it may not be that bad. You know what? That is like a really tone-deaf headline, but they're probably right. I know, right? Well, they're probably like, here's the thing. Think about it. Okay. If the next meeting, the Federal Reserve comes out and is like, well, we're already seeing a significant decline in inflation pressures, so we only need to raise interest rates 25 basis points this time. All of a sudden, market completely flips all around, right? Like if they only have to get to 2%, they don't have to get to 3%. That said, treasuries are still above 3%. So, like, I don't know. They kind of look likely to come back. Okay, so where was it? Oh, now that's interesting. Okay, so there was a huge hole at 020, right? But now there's been another distribution at 040. So I think here that we've got a situation where they've probably distributed. So we could continue to play it, but the big trade is over. If I had continued to hold, I would definitely want to have been out by now. If I had held through the news and even past when I took it off, and even past 118 and when 1806 and everything, seeing that other large 50K going out at 04 would be a pretty good sign that it's it's done. Because at the very least, it's going to sit here for another 45 minutes before they take another leg up, probably. Do you have a video here in YouTube about your indicators? I do. I should probably link it. Do I not link it on my page at speculatorseth.com? I have to say, in my opinion, the best resource for my indicators is the detailed documentation on it, because that really goes into depth about what they are and why you'd want to use them. I do have a video. I know, I feel like the video is kind of boring. Not that many people watched the video, but I do have a video about it. So you can go find that. A lot of them are things that I would hope, if you're, especially if you're an experienced trader, you would see why those things would be naturally very useful. So anyways, man, I really think that this must just be that the market thinks that those PMIs mean that the Federal Reserve will back off of interest rate increases more quickly. And probably somebody was getting stopped out, because it is very bizarre to have a move up and then off of a news release, and then it just kind of sit there for a little bit and then just totally boosh, right? Like, that must have been a liquidation. Somebody must have gotten a margin call. So that's the only explanation. Yeah, it would have to be somebody huge. It would have, I mean, like somebody puked 20,000 contracts. So I don't know who's big enough to be trading 20,000 contracts and get a margin call, but jeez. Need some advice considering joining Axia futures course to learn footprint, order flow, style trading, any other alternatives on my own. It might take forever. Okay, so here's my opinion on education. First of all, it's very hard to price education, because like supply and demand in an education market are like really messed up, and like how much are you actually going to get out of it? And it's particularly difficult in the trading world, because even with a world-class education that was like really a solid education course, you could still fail, right? So, I have never taken Axia's course, so I can't recommend it personally. I really love the Axia guys. I think they do very good work. I think that you learn a lot from Axia. But the other thing that I would state is to remember that markets are more statistically efficient than they are informationally efficient, right? So the things that I find are going to help you the most are going to be the things like understanding economics, knowing what the news is, watching these moves. Like to me, maybe this is the way that I just need to approach it, and we need to make this a program. I think that your best education is going to be come here into the stream every day for months and months on ends and actively talk to the other people in chat about what we're seeing in the market right now. Form hypotheses about why the market is moving today, and look for things that will validate or invalidate your theses. Okay, but that's how you learn how to take advantage of the informational inefficiency, because there's just too much stuff. Like I have to say, the reason that we have a market is because it's impossible for one person to know everything, right? They tried to do this in communism, right? They would try and set the price for everything. And they found that it was like, well, yeah, but we had to price like hundreds of thousands of items, and there was just no way that we could do it, right? So why we need a market, okay? So, I wish that there was some strict format I could go through and I could say, here's everything about the economy that you need to know, ever. No. I'm writing a book, and there's definitely a number of things that you want to know if you're going to trade treasuries, for instance, right? What are the sorts of things that tend to create order flow in treasuries that we know of, right? But the thing that I think helps the most is the experience watching it happen, okay? Now, with that said, that doesn't mean that the Axia course is useless or anything like that. It's just I'm trying to give you a little bit of color about what's going to help you out the most and how much is this course actually going to help you out, right? Because I'm sure that Axia's course is really good, but it is expensive, right? So it really kind of depends on you, right? If you have a ton of money laying around that you don't know what to do with, and few tens of thousands of dollars or whatever is nothing to you, then go for it. Because yeah, you probably will learn some things that will save you time in the long run, right? But if you're like, a kid just out of school, you're not really making money today, and you're thinking, oh, well, I'm going to make trading a career, don't do it. Seriously, don't do it. If you're going to spend money on an education like that, go to coding camp, okay? You get way more money out of that, because you can go to coding camp for a month or whatever and come out and instantly be making $70,000-$80,000 a year, okay? Even during a downturn, right? But if you have the money, then you can do that. But if you're like, for me, that's too much for me. Even right now, I don't think that I could justify dumping that much money into education courses. I would love to take their courses and like review them for you guys. If Axie wanted to do something like that, I'd be totally down. But of course, the only reason I want to do that is because I want to see it. Actually, I want to do it because I think that somebody that knows a lot about order flow to come in and see a course, I think that my opinion is more useful to you guys on that. But I haven't taken the course, so just looking for a professional hand for initial codes. It's $2,000 for their $2,000 isn't terrible, but from my view, that's just $2,000 that you could have put into your account, right? Like if it's like, okay, I spend the money on the education and then I only have $2,000 to put into my account to start with, then you probably don't do it. But if you do your education and you still have tens of thousands left over, then that's when you want to go for it, right? What's your review on getting funded to trade futures? I mean, it's fun. It's not like it's like harmful for you to do it like 1 month or something, but generally speaking, it's not worth it. The performance targets that they give for you at funded trader programs are extremely aggressive. You typically don't hit those marks unless you're doing something a little reckless, let's say. Basically, you have to create a strategy that has really fat tails to do that sort of thing. So I generally, I don't do the funded trading program, right? I could go and get funded at one of those things and probably trade a larger clip and everything, but then I would lose it. And, I feel like that I go in and do that. Like, I've been through the experience of you do really, really well and then blow it all like 5 times, right? I don't need to go to a funded trader program to do that, right? Instead, what do I need to do? I need to sit here and just be patient and only take the trades when I really know that there's a good probability for me, and build a strong record over the course of many, many years. That's what I need to do, right? So that's what I think that most retail traders should be trying to do. And I feel like that the funded trader programs are a distraction from that. Is 5K USD enough to start? Oh yeah, for sure. You might want more than that if you are going to trade ES or MES even. I don't know. You can easily lose $500 in MES, right? But I would say though, more recently I've kind of been going. I'm still kind of working this out, but I think that you want like your max daily loss to be 1%. No joke. I want your max daily loss to be 1%, and hopefully you have days that are really good that maybe you make 5%. What about the Jigsaw institutional trading course? Don't take it. Don't take it. Listen, unless you're like filthy rich, don't take the institutional trading course. So first of all, when you buy Jigsaw and you get the independent course, or sorry, when you buy Jigsaw, it comes with an independent course, and those materials are actually really good. Okay, like the base level materials are pretty good. At least they explain to you everything that you're seeing here in the order flow. Okay. There's another step beyond that I think is like $500 or something like that. If you have the money laying around, that's one where it's like, if you've been trying it for a little while and you feel like that you're having a hard time understanding things and you need more guidance, then maybe I would go and buy one of those courses. The institutional course is like, I'm filthy rich and I just want to take it. Like Peter, if you talk to Peter, he would probably tell you that. There's been a number of times that Peter has talked about, or somebody asked, oh, maybe, I'm just not getting it. Maybe I should take the institutional course. And he said, no, just you already know everything that you need to know. You just need to do it. Right. Participating in Discord, either here on our interest rates channel or in Jigsaw's Discord, really helps too, by the way. Well, I honestly, I don't know what exactly is in the institutional program. I'm just saying that it's a lot of money. It's a lot of money, and I think that people have this thing in their head that, like, if I take this course that's X $1,000, then that should mean that I should be able to make X $1,000 out of trading futures after I take this course. And that's generally not how it works. Like, you have to realize that the market is really kind of structured against you. It is a zero-sum game. So you don't make money without somebody else losing money. And what tends to happen is the best player, the most informed player, tends to be the one that wins over and over and over again, and everybody else loses. So from that perspective, you really have to question how much you want to invest into trading education, because the probability is that you're not going to get your money back out of it, right? And there is a lot of information to be had, but most of this stuff you can't figure out on your own. And to be honest with you, like some of the stuff that I teach in some of my videos, like the stylized behavior of markets, I guarantee you none of these other trading education courses are talking about that. You just go and get that freaking book, man. And you read that book and you know more than most of these educators, right? So, and that's something that we know it's empirical. It's an empirical book. So that's information that is how you implement that in your trading is a little bit more of a difficult question, but at least it's information that is true, right? Find someone who uses Jigsaw. Well, no, I mean, I wouldn't play it like that, right? I don't want you to follow me. I want you to collaborate, right? Because if you came in here and you just said, okay, whatever trade Seth takes, I'm going to try and take that trade too. And you did that for 2 years or whatever. First of all, I think you probably would lose money because it's hard for me to make money. And if you're late, if you're like 5 seconds after me, you're probably definitely going to lose money. Okay. So trying to follow me is not going to work. And you're not practicing the real skill. The real skill is coming in with a critical mind and looking at the information that we know, right? And trying to come up with a thesis that will predict future orders, right? That's really, and to do that, you have to do that. So what you got to do is you got to come in here and you got to say, okay, I saw this piece of news. I think that it's this piece of news. And here's why I think it's that. That's what we do here, right? So we say, okay, before this, we're like, what's going on? Seems like the market seems to know something. They're really buying it hard. I don't know what's going on here. Okay, well, there's a PMI coming up. Maybe they're front running the PMI. Seems like that was the correct response, right? Right. And you do that enough time, you start to get a feel for what's going on, right? That's how you build the experience. That's, I think, is the best education is the market itself. The book is called Trades, Quotes, and Prices, Markets Under the Microscope by Jean-Philippe Bouchot et al. But I have a video called The Stylized Behavior of Markets, and go and watch that video. I summarize the book essentially, and I show you the book and everything, so you can go find it on Amazon. But it's quantitative study. Yeah, I do have a Discord. The Discord is in the video description. It's pretty quiet, but we have the longest running active treasury trading Discord. Well, we have rooms for all of the futures, and we're by far the largest free futures trading Discord. But we do have an active interest rates channel. That's kind of how it started. It's uneasy to distinguish a margin call from a hard awakening. Either way, somebody puking. Yeah. Yeah, the Discord is cool. The chat is cool. I have to say, guys, there are some traders here in chat that are really impressive. They don't come in and say, "Oh yeah, this is how much money I'm making. I took this trade. You should follow my trade." Yeah, no, really not. I mean, we've had people that come in and do that, but it doesn't really go anywhere, right? Now, if you're just starting out, and you're buying Jigsaw, I would just buy the independent package, to be honest. I mean, that's what I have, is I have the independent package. I have their more recent Jigsaw training, because they were kind of doing like a pilot program as they were making it. But Financial Juice News Squawk affiliate link. Is that really, why is that? Well, it's kind of necessary. I think the first time that no, I don't know. I remember there was one time somebody said, "Oh, you didn't say that was an affiliate link," and I was like, "Isn't it not obvious that it's an affiliate link?" And so I made it super extra obvious that it was an affiliate link. What is the complimentary advanced order? I think that is the new education. Hold on, I haven't seen, because I didn't know that that was like available yet. How long have you been trading futures? Well, you always have to overcome FOMO. I'm having a big issue with FOMO, reventuring, basically everything to do with emotions that I need to overcome. Yeah. Well, so I've been doing it for 5 years now, futures trading. I've been involved in the markets since like what got me into markets was the 2008 crisis, right? So I started trading on like sim accounts, like on like a spreadsheet and stuff back in 2008. But I very quickly found my way into one of the large banks and did technology. Like we made risk control systems and the exchange connectivity stuff. So I worked there for like 6 years, I think it was. And then it's been about 6 years since. And so for most of that time, I've been trading futures since then. So that's how I got into it. Okay, but how do you overcome FOMO? Here's how I overcome FOMO. I need to have something that I believe has a high probability of predicting future orders. So you could have played the PMI. I don't think this is a very good example because our ability to predict what the news numbers are going to be is a little bit limited, and I wouldn't necessarily recommend that you play economic news, okay? But today was a situation where we could have done that, and that would have been the play, right? We could have come in here today and said, okay, the PMIs for Europe were really bad. The PMIs for the US are probably going to be bad too. So I'm seeing some order flow buying. It looks like there's some really strong trending going on here. At around 715 in the 10-year, could have bought around 117.16 on the theory that the PMIs were going to be bad and that would induce more buy orders in the treasuries. That's the play that we could have made, right? If we don't have, you don't need my permission, but you need to have a real theory that because of X, future orders are going to be this, okay? So everybody always talks about technical analysis, okay? They think when you see a pattern like this, the probability is that it turns out like this. That's nonsense. It's a misapplication of statistics, okay? That past data doesn't predict future data unless there's like a real reason for that thing to make the future data happen, which as far as we've seen doesn't exist. Markets are really quite random, okay? But if we know what the orders are going to be and we know what the current state of the market is, we can predict how it's going to play out almost exactly, right? So the past data doesn't predict the future data, but if we have the past data so that we can understand the current structure of the market and we know what the future orders are going to be, we can predict what the price is going to be extremely accurately, right? So how do you deal with FOMO? You have to predict future orders. And if you don't have something that will predict future orders, don't trade. Right? Now, the one that's hard to deal with is you're early. Right? The one that's hard to deal with is you're early. So, okay, I think like let's use this chart as an example. Okay. Oh, they're getting pretty. Oops. Here we go. Oh yeah, they are getting pretty aggressive here. I should buy right here. Oops. Oh, it went down. Well, I don't want to be in the news. I got out. So now you're out. Okay, so you took a loss, small loss here, right? Oh, okay, it's crazy. Now I want to buy in. Oh no, I just got in all of the chop, right? Right? So maybe you knew what it was going to be, but you didn't get in. So how you deal with this is that number one, getting a good spot really helps, right? So if I just saw a move that gets me all excited, like this move would get me all excited, right? That move did get me all excited, right? But what did I do? I said, no, I'm not going to take it because it's done. You missed it. You missed it. And here's the thing is that this, so if, how can I draw this so that you can see it really clearly? Because I know that the chart is probably small for some of you guys. I'm going to try and make it as big as possible, right? This right here. The Discord is free. There is, if you join the channel, the YouTube channel, there's like a $5 subscription to the channel. And that gives you access to private channels in the Discord. But we don't really use that all too much right now. Just but if you want to support the channel, like here's the thing, if you want to help the channel out, just go and watch the videos and comment on the videos. That's what helps the channel out the most. Okay? And you can buy the indicators too, but you know, if you use NinjaTrader. Anyways, this point right here is kind of like the point that I get excited, right? So from there, you should expect there to be here's like interest. Okay. From here, you should expect the interest to be like this. Okay. And this time period tends to be about 45 minutes. So from here, this point happened at about, I want to say 7. Well, this started at 7:15. So if this was the start of it, then about 45 minutes later would be 7:45. Right. Same with here. So we saw craziness at 8. So at 8:45, which would be about right now, would be if we were to have a leg higher, when I would expect that leg to start coming in. Oh, also buy his merch, dude. I always forget about that. Like, I really should have a point. Like, I come in through the stream at certain points. Like, it just shows you what I'm focused on, right? I'm focused on trading. We have these mugs. I love the mug. Trader's gonna trade. Because why? Because a lot of the times markets just move for no real good reason, and it's just that people are trading, because all orders have an impact on the market regardless of whether or not there's real informational content behind them. I digress. So again, if you missed the move, wait 45 minutes. That's how I do it. If I missed the move, I wait 45 minutes. If 45 minutes later I still like it, I still want to buy it, then I take it. Right now, I don't know. Maybe if it was at 118, maybe I would buy it, but not at 04. Are you a Freemason? No, what makes you think I'm a Freemason? I don't. I'm told that the Freemasons are having issues with the membership. Anyways, yeah, this is how you deal with FOMO, right? If you missed it, wait 45 minutes. If you took it and you got in a screwed up position, wait for the 45 minutes after the move started, right? Try and get a good position. Like, you look at the distribution, you'll see it. You'll see, like right now, you should. Oh, sorry, you weren't even seeing that other chart necessarily. You can see there's a distribution here, right? So if I'm going to buy it right now, it would certainly be better if I bought it in this area, right? Maybe this area, right? If I'm buying it up here, there better darn well be some really strong momentum or some reason that I think that, like, it's really about to go, like, right now, right? It does take extreme discipline. But you know what? The more that you do it, the easier it becomes. The more that you like, I think that one of the big tricks to trading is being humble, right? This is why I'm always telling you all this. A lot of people say, "Oh, what you say is so discouraging," because I want to come in and, like, make this my career, and I'm like, well, that's probably not going to happen, right? But once you understand that, and you understand why, now all of a sudden what you should be doing becomes really, really clear, right? Unless I have a really good reason that I think I can predict the future orders, that's what is necessary to have a positive expectancy. So if I don't have that, there's no reason for me to be in a trade. Boredom is not a strong enough reason to be in a trade, right? So today I didn't take a trade. I should have taken a trade, okay? But it wasn't because there wasn't a trade available. There was a trade available, and the reason I didn't take it was because I wasn't in the know. I wasn't thinking, you know what? Listen, I haven't been sleeping well. The baby's got me all, this has been working hard at work too. So I think I'm a little bit behind the curve with the market lately. Okay. But, if I had been on the ball and knew what was coming, then I probably could have predicted this order flow, and we could have taken advantage of it and taken a trade. Okay. Right. But I didn't, because I didn't know what was going on. And so guess what? I didn't take a trade because, hey, something might have told me to go short. I've kind of been preferring shorts lately, right? Surfing is discouraging. If one should stick to it, then it's fun. Yeah. So it takes extreme discipline, but the more humble you become, the easier it is, because once you admit that I have absolutely no effing clue what it's going to do next, because it's mostly random and I should only take a trade when I really see something that really screams at me that it's going to move a certain way, right? You're not going to take a trade every day, but the more that you stick to that, the easier it becomes. Then all of a sudden you look at all these other people that are like, well, shouldn't you be taking a trade like every 5 minutes and stuff? And it's like, no, why? These people are crazy. You're just trading noise. Trading noise, maybe you have found a statistical inefficiency, but I doubt it, because they're really hard to find. I can't find them. I haven't found one that at least I felt confident like automating and trading it. You front run a monster order on ZN based on 0 info maximum order book. What the heck are you talking about? Yeah, well, okay, so there it was another thing, was that after it all happened, I did play the structure once I knew what was happening, right? And I did make money on it. Here's the thing that you have to understand about those NASDAQ killer, is that number one, you can take those over here in the 10-year. It might not work out so well for you if you're trying to do them in the micros when there's spread is out there. And that's why I didn't click in, even though I really wanted to. Like, I really, really wanted to be in at 3.110. And I thought that the news could come and maybe the news would be one way, and it could give me a good opportunity to hit into it. And it just moved so quick. I was like, no, it's not going to happen today. Not today, guys. Now it's too volatile to touch it, right? But in the 10-year, the liquidity is so heavy that you can kind of get away with that stuff, right? But then the other thing that you have to understand is that what I did there is very risky, right? If I came in and I took a tick out a few places, I added to a trade, and in the end, what did I get? What did I get? Where is it? Where's my thing of all the trades I took? So I took 3 of them. My winner was 900. Okay. Well, if it had gone the opposite way just as strong, I probably would have lost 2K. Right? Because I would have been the wrong direction on 5-6 contracts. That wouldn't have ended well, right? So I know that it looks really good, but you just have to realize the amount of risk that I'm taking on. And I'm only able to take on that amount of risk on a sim account. I don't have an account big enough to do that kind of stuff. Maybe if I had $100,000, I'd put that stuff at risk every day, but I don't have $100,000. Oh, I had no clue what the big one that was popping was going to do that. Hell no. If I had known that, so look back at what happened, because I used 9 contracts overall, I think. So I had added way down at, what was it? 117.19. So I was adding down in here, right, on the news. Oh, I hate it when it does that. My little pen kind of screwed up there. I was adding down in here, right, expecting the news to push us back up to 24, right? So let me redraw that. So I was getting in down in here, expecting that we would pop back up to a new high after the news, maybe coming up to like 26. So I took a ton of contracts off over here in the 24, 25 area, and then out of nowhere, this thing popped. And I was it just happened to still have some more contracts. So when it popped, I took the rest off. And I took it off early, because my immediate thought was, that is absolutely insane. Really good chance that a move like that can be a top. So I don't want to mess with it anymore. I get out of it. I had absolutely no clue that thing was coming. That was the most insane. One of the most insane things I've ever seen. I just got lucky. It was just lucky. Come on, you're lying, dude. No, I really was. It was dumb luck. And frankly, the whole setup was like based on doubling down. Like, again, what if it had gone the other way? Can you imagine gone the other way? Because like the thing was, if I had known that was coming, I would have held on to all the contracts that I had, and I would have made like 5 times as much money as I did. I know it's sim, but this could have been a $2,000-$3,000 trade if I had held all of the contracts that I had, because I had at max 9 contracts. If I had at max 9 contracts at 18, can you imagine? Can you imagine? That would have been almost $18,000. Not quite. It would be more like $12,000-$15,000. Like, this is crazy. No. I wish, like, I get what you're saying. Like, hey, there are all of these things that I could do. I could sit here and I could focus much more strongly on selling you mugs. They're good mugs. I think they're fun. And they're cheap too. I could sit here and focus on selling my indicator suite. You know what? I think I have a good indicator suite. I think that I should hire somebody to sell the indicators for me, that they're not a trader and their whole focus is just selling those indicators and like hyping them up and making content around, because we could make a lot of money on the indicators. They're good. There's something that I really honestly believe everybody that owns NinjaTrader could benefit from having, and I would like to continue working on it, right? Yeah, you know, I put it out there. If you want to sell my indicator suite, I'd give you 50%. if you just sat and spent the whole time working on selling them. I don't know. So if you made $50 a pop, right, and you sold 100 of them a month, I don't know. That'd be really hard to make a living off of, right? Yeah, the mug is going strong after 2 years. There you go. But yeah, I could focus on all those things, but I don't. What do I focus on? I'm focused on the trading and the thing that helps you guys the most is development, right? And yeah, I could also come in and focus on trading in a way that will get me the most attention, so that I can put this big number on my thumbnail and on YouTube and attract a lot of people to the stream. And the stream would probably be a lot more profitable, and probably would make enough money from YouTube to quit my day job and just focus on this then, right? The tape on the left, is it NT? No, I'm not sure what you're talking about. I use NinjaTrader 8 and Jigsaw. Anyways, you know, I could do that, but I don't do that because why? Because I want to help you guys develop into long-term profitable traders. And that kind of means not taking on a lot of excessive risk and only trading when you know you have the edge. Right? Because my focus is building the best traders possible, not on building the most popular stream or making the most money on indicators, even though I probably should put more in, you know, because listen, if I made more money off of the indicators, that would be, sorry, I don't have to sell 100 of them, do I? No, if I sold 10, that would be 500. If I sold 100, that would be 5,000. Yeah, whatever. With what I'm using NinjaTrader brokerage. So if you're basically the way things are set up now to use NinjaTrader, you basically have to use NinjaTrader brokerage. Maybe I'll move to EdgeClear and put up with JavaScript. Not JavaScript, Java. Ugh. We could do it. It seems I mean I like the EdgeClear guys mostly is the thing. That's what kind of attracts me to them. But you're done 2 hours worth of labor for nothing. Yeah. Did you enjoy it though? Because that's the thing. Like, if you want to become a trader, it's all about the money for you. Don't do it. Don't do it because you're probably not going to get paid. But if you love the markets, and I mean you love the markets, not just charts and making money and the high that comes from taking on risk and stuff, but I mean you actually are interested in like monetary policy and economics and what the current state of the economy is and all of the politics that surround those sorts of things. If you're truly interested in that stuff and you enjoy trading, then you're in the right spot, right? Because then that's what's going to allow you to be able to come in here and sit and watch these treasuries, which are normally quite boring, to be frank with you, every day for 2 hours for as long as it takes to get good. Knowing that even when you get good, that you might not get all that much reward from it. But what's the reward? The reward is the trading, right? You ever watch the third Cars movie? If you haven't watched the third Cars movie, don't watch it. It's a shit movie, okay? But if you have watched the third Cars movie, there's this point where McQueen gets picked up by a new rich sponsor, and the rich sponsor basically wants McQueen to retire so that he can sell McQueen branded merchandise. And McQueen doesn't want to do that. He wants to keep driving. The owner doesn't want McQueen to keep driving because if McQueen keeps driving and loses, that could harm the brand and they won't make as much money. But McQueen says that all of this, like, retire early and, just make money off of the merchandise and stuff, that's not the reward. The reward is the racing. And it is that way here in trading. The reward is the trading. The reward is watching the financial markets and not knowing what they're going to do next. And sometimes they do absolutely bonkers things. That's the reward. If that's not enough of a reward for you, then it's going to be hard to make it. Oh, I was looking at you the entire time. No, I love it. I saw nothing in range. Didn't lose, though, but didn't win. Lost me 2 hours. Yeah, I won a You didn't find that entertaining? Come on, NASDAQ Killer. You loved it. Man, when I saw that, I just was so flabbergasted. I didn't even know what to say. It was just like, what the fuck just happened? Man, when you see a stop run like that, nothing's better than that, man. I'm going to go back and watch that pop all day long. That's so good. What are we going to name today's video? I got to get going. The most insane of pops in treasuries. The most insane pop off in treasuries. That was so crazy, man. Just thinking about it, where we're at right now. Can you believe that we started the day at 117.09? Almost. Not quite, but almost a whole point. And like, here's the thing. Well, it's a little bit too late now. So I think that suggests to us that we're probably not getting another leg. So what happens now is the balance is at 04. We're likely to range around that, but there probably will be some upward pressure. So I wouldn't expect like another strong push move sort of a thing, but we could just meander and float up there because there are like some big orders above us and everything. So they might float up there, but for me, it's time to go. I will see you guys tomorrow. And in the meantime, make sure you check all the links in the video description, okay? Buy a mug, whatever. See you tomorrow. Make sure you like and subscribe. That's the most important thing. Like, subscribe, like the video, subscribe to the channel. Watch the videos on the channel if you haven't. You'll learn a lot from those videos and comment on those videos. That helps the channel out immensely. And if we build the channel up, we can build more content and we could hire people. I would really like to have employees, guys. Okay. Stay profitable, friends, or at least don't blow it.